Buddy, that we need up on stage quickly. We started yesterday morning as we left. Futures were in the green. We ended the day solidly in the red. 10th day of strikes in Iran and a bunch of, I'd say, legal news and regulatory news overnight, along with a bunch of earnings to talk about, everything from General Motors to uh, Cracker Barrel to we can talk about AMC, which had a phenomenal day yesterday, much better than when we left the show yesterday morning. I think it was up in the teens. It finished the day up 26% for those that are in the meme stock world or believe in the future movie theaters, or the resurgence of movies and movie theaters. Certainly was a strong performance, and the company has projected well as well. We have a date for SpaceX first quarterly earnings report that will be on August 4th. Stock currently trading around 120, 121 a share. Futures, everything is green this morning, not just futures, and solidly green. But the 10-year is up, the 30-year is up, crude is up, gold is up across the board here. The scariest is probably the yields and also the dollar strength, which keeps rising. We do have a Fed meeting on tap next week. We will get more out of Kevin Walsh next week. Um, and we have um, we have tariffs against Canada. We'll wait for Eric. Hopefully, he will join us to talk about the tariff situation with respect to everything from cement and hockey sticks. And I was a hockey player in my youth, so that hits close to home for me. But I am not a buyer of hockey sticks. A 50% rise on hockey sticks um, is serious. And Anas certainly will talk to us about the Houthis, Saudi naval blockades, and so forth. Um, but I'm thrilled that Carlo is back. Carlo, you really came back at an important time, so thank you. Um, so clearly, clarity is top of mind, and we didn't realize how much of a last ditch effort was going to be made. Patrick Witt, who had left the White House Crypto Council as executive director for military training, that has been deferred. He is back. Deputy Director Harry Jung is leaving the administration, and it seems like the ethics provisions in clarity are going to be at least attempted to be dealt with as opposed to ignored. And so we are hoping that we can get to a resolution here. What is the latest and greatest on what is going on the Hill? Carlo, welcome back.
Good morning. It's good to be back. Um, Driving, so I apologize if the connection's a little shaky, but I'm right back in the frying pan. I have two federal criminal sentencings today. It sounds like progress has been made on ethics. Eleanor Tarrant broke news last night that it looks like the White House has reached some kind of a compromise on the ethics provisions, the details of which I do not think are public yet. The Patrick Witt side of this, the fact that his National Guard assignment has been deferred, uh, is a very strong indicator that this administration believes that they have the momentum in their favor to get this done. It is indicative of the market signals that we're seeing that this is an important thing. We've talked about it for a long time. The clarity is essential. Uh, We have other countries around the world, as well as other regions, that are adopting this technology. And if we don't pass this, we stand to fall behind and lose a tremendous advantage in the momentum we have leading in the digital asset sector, especially when it comes to the transition of digital assets and blockchain technology into stock and equities trading. And that is not going to end if the Clarity Act ends. It's just going to be the United States will be in a regulatory gray zone with no clear law on the books while the rest of the world moves forward in advancing this technology. So it is very important that this gets done. And I think the fact that we're starting to see crypto go green, Bitcoin crossing over 66,000 last night, showing really good momentum in the chart, looking like it wants to break out, I think is a good positive indicator that the sector is enthusiastic that the tide has changed on Clarity. Last thing we missed, I don't know if it was brought up, but July 18th was the deadline when all the major regulatory agencies that are framing out the rules for the Genius Act were supposed to report their proposed rules. There has been a comment window. There were proposed rules that were put out. They had been looked at, commented on. The deadline came and went. Nobody turned in any proposed rules. So the clock now starts to tick. It's either 6 months from adoption of the rules or January of 2027 that the Genius Act fully goes live with its rulemaking regimen. So I'll continue to monitor that as well and see what agencies are going to come out first, and then give some analysis on how those rules will impact enforcement and regulation compliance going forward with respect to the Genius Act. But there's no denying that blockchain technology between the Genius Act and the hopeful passage by August of the Clarity Act, I think will be the impetus that sparks a renewed bull cycle in crypto for those altcoins that are actually building adjacent to 24/7 trading and tokenization that actually provides speed, reliable smart contract execution, and true utility. I think they will see positive momentum. And of course, Bitcoin hanging above all of this, hopefully, we'll also see. It also looks like, David, that MSTR in pre market might be finally crossing back over $100. And obviously, Saylor bought a bunch of Bitcoin yesterday, and Bitcoin did not seem to be disturbed in the least by any of this. So, all positive indicators. I remain hopeful and bullish. Back to you, David.
As always, Carlo, can I ask you the fact that the 1 year deadline came and went? Does that indicate anything to you that we haven't seen the rules for the stablecoin industry written and getting ready to be imposed? What does it say to you?
It's not at all uncommon for these sorts of deadlines to come and go. Nothing fundamentally has changed. I think that just there probably is some massive coordination that has to happen between OCC, FDIC, Treasury, and I don't know if clarity is one of the things that they're waiting for before they drop the final rules. That's something that I've been thinking about because there is some stablecoin overlap in the Clarity Act with respect to the rewards provisions on how you can earn yield or rewards on stablecoins. And there are components of that within the Genius Act regulatory framework because remember, the Genius Act left that question sort of open ended. So I would not be surprised if all these agencies got together and said, you know what, we've come this far. Let's wait because even if they release them July 18th, they still don't go live for at least 6 months after that release date or by the latest January of 27. So there's no urgency to do anything by July 18th. And they may be waiting just to see what clarity comes out with before they commit to printing out the formal rules for stablecoins. I think that's what's going on.
Great. Thank you for the update. Timothy, your hand, but I did want to stay on legal and regulatory with Carlo. Go ahead, Timothy.
Good morning, everyone. I just wanted to maybe briefly add on to the crypto space. I actually agree with Carlo. I think sentiment seems to be changing in crypto. I think we are close to, or maybe already past, I think the peak bear sentiment. At least that's my personal opinion and my feeling. So much so that I have started building some considerable positions in Ethereum again, Bitcoin, Chainlink as well, Solana, and Ondo. I was curious to get some general opinions here in the room on how we see crypto. Do we think we've seen the worst of it, and also definitely would love to hear maybe from David Nakowski from a more technical perspective on how these crypto market in general, maybe some of the specifics also look, if there's time for that today.
I have nothing to add on to what Carlo has said in respect of the crypto developments. So I'll leave it to Dave Nikoski to talk about the technicals. Go ahead, Dave, if you'd like to add.
Yeah, it looks interesting. You had a five wave down pattern on it. So, I don't practice that type of technical analysis on wave analysis like Elliott wave, but I mean it's interesting. I think that this is more than just something changing for crypto. I think it's the change in the overall market. You look at copper, you're at a 1 month high, you're close to breaking out to new highs. Copper stocks have been trashed. You have gold and silver holding just below a major resistance level that also looks like it could be taken out. To me, as a technician and for what I do on relative strength, it's just water in a fish tank. You're lifting one end, it's coming back, when you set it down. I've said over the last 2 months and even before semis peaked out, money is leaking. I call it the Olestra effect for anyone that gets that humor. It's leaking into other areas of the market. And that is just a process that takes place during market corrections and or tops. I like I said, I don't need to call a top in semis. I just have to find other places to go. And I'm finding it. I've got tons of groups. I mentioned the workforce stocks like Robert Half, Manpower. If you went through every one of those stocks, just about every one of them are up 30+% in the last 2 months. I was catching them early and pounded them on X, and Manpower had great earnings. I think that was up 20% last week in one day. um, I'm still finding that type of behavior in a lot of groups in the market. So, I just look at the market without an opinion and without developing some, hyperbolic story. And I'm not saying anyone is here, but it's a process the market goes through. When you want to reduce risk, you start to look for other areas, and they're just all over the place. Tech was leading. Semis got to the largest weighting in ever in history. I'm more in the camp that many semis have broken through the 50-day. I think their sells rallying to the 50-day. You look at Korea, you look at the Nikkei. They're showing definitive tops historically. Even when you look back at other periods where our market moved up with a group or sector in a parabolic fashion. You could look at foreign markets are also weighted heavily in tech. I mentioned Toyota Motors has absolutely been pounded while the Nikkei is near new highs. I pointed to a couple financials, SHG and KB, which are in Korea, are actually up, guys, and the market's down. They investors just sold everything non-tech, and now you're seeing the ramifications of everyone in the same place. Humans are like lemmings. Their fear and greed rule the day. And, history repeats itself. I mean, we just continue to do what we've done during every parabolic move in history. So I'm finding tons of opportunity. It's not and you know what? I did a interview with George, a couple weeks ago. Stock picking is going to be king. I can find a lot of groups where there isn't, correlations between some of the companies in that group. You look at McDonald's, look at BJRI, 30 to 70. McDonald's straight down 14-year relative strength lows. That is the type of behavior I'm seeing in this market. Does it have to make sense? Nope. It is what it is. Everyone bid up Walmart and Costco to 40 times earnings. Nvidia was sitting at 12. you know and now Costco and Walmart are correcting. Guess who's winning? Target's up huge. It's up greater than, I think, 60% off of its low just 5 months ago. So you are seeing rotations where they bid up the names that are well recognized, and there's nothing fundamentally wrong with them. Great fundamentals, but at the wrong price. And that's what I'm seeing, in the behavior of the masses. And, when something unfolds, you take a look at Apple. What is the price of Apple times sales? It's a very safe stock, but when everyone heads to safety in the tech area, I can tell you what happens afterwards. I can't tell you what day, but I'll catch it. And that's what I'm seeing from my chair. So back to you.
Excellent. Thank you, Dave. Carla, I just want to stick with you for a second, just on the legal side of things. I think the big legal news yesterday came out of the Northern District of California, where a district judge went ahead and granted a temporary restraining order, or a TRO in legalese, to those states that are opposing, now 23 of them, but only 12 of them are in the case, opposing the purchase of Warner Brothers by Paramount. And there is going to be a 14-day TRO prohibiting the merger. The judge said that there is compelling evidence that if the combined firm were to exist, it would control 27% of share for wide release movie distribution. And for that reason, there is going to be a trial. And whether this is going to result in something we haven't seen in quite a while on such a high profile level, that essentially the judicial branch, without any involvement out of the federal government, gets involved in I would call it, international merger of this scope, and breaks it up, even when the FTC stood on the sidelines. I think that this will be something new. Antitrust lawyers, for the most part, have never had such a fun day. State's attorney general have never been so powerful, and whether we will see more of this to come, is certainly something that we'll have to watch out for. Any thoughts on all of it, Carlo? Carlo may be driving, or nobody can hear me.
I
Oh, no
apologize. Am
problem.
I okay?
Go ahead.
Yeah, it's an interesting thing that we've talked about previously, and I think this case has ramifications because we're seeing the federal government take a very laissez-faire approach to monopolies and to antitrust matters. And the fact that there has been unprecedented access, we'll call it, to the White House from these major players uh, has certainly been a factor in shaping that policy. So the fact that the FTC in this case has taken a very hands-off approach, and that it is now falling on the states to try and stop this merger in federal court, and that federal judges are intervening and giving partial relief right now, sets the table for a bigger battle, which is going to be just how much can these major companies come together and skate, or at least go on the fringes of the traditional limits of antitrust reach, and create these massive, in this case, media conglomerate. The consolidation of news and media is happening at a very rapid pace under this administration, and a lot of things are getting absorbed into one parent company. And there are concerns that there's too much of a consolidation of power under one major brand, and how that can skew both what we get, what we see, how we see it. So the fact that these states are intervening is something to definitely keep an eye on, because the regulators clearly are taking a very hands-off approach to this, and I think that that's unprecedented in antitrust litigation jurisprudence. And I think it's because this administration is obviously very pro-business, but it certainly begs the question: who gets the nod? Is it the people that are in the inner circle that are consolidating power under this administration because they can? And what are the ramifications going to be down the road if the court intervenes? This is probably going to get all teed up for the Supreme Court anyway. So we're just going to have to be spectators on this one, I think.
Yeah, and in addition, it is no secret that this administration, beyond being pro laissez-faire, is also a very big supporter of Larry Ellison, whose son is the CEO of Paramount, the buyer of Warner Brothers. Let me stay for a second in public company land. Andy Kaufman, good morning. Thanks for being here. Always extra valuable when you're here. Um, we the SEC is as we've discussed, expected to change reporting rules for companies, for public companies, no longer to only have quarterly earnings reporting, but also to have half year. And even though there has been a lot of backlash and a lot of commentary, certainly from investors, but other institutions have also objected to this. Nevertheless, it seems like the SEC is going to go forward with changing quarterly earnings requirements. If you could comment on that, your thoughts on that, and then secondly, what you think about, frankly, everything going up this morning, both in terms of stock futures, dollar strength, oil, 10-year, 30-year, and so forth.
Yeah, good morning, everyone. Thanks, David. You know, the earnings situation, the reporting with the SEC, I'm a fan of. I think that when I got in this industry, over 2 decades ago, there was called, real money and there was fast money. And real money was really long-term money, and they were able to invest and say, okay, where are things going to be over a real cycle, not just on a quarterly basis. Then 2008 hit, and you could have such a large loss on your portfolio that real money, long money, such as insurers, they became mark to market every quarter. Because if you go to your board meeting, you could get fired because you had to take impairments on your balance sheet and things like that. So what ended up happening ultimately is that these real money and long money players really became quarterly investors. And because you had to go in front of your boards and you had to justify your positions and say, look, like these are going to be money good assets, on the bond side, specifically, that it just added to the volatility in the market. And I think that when you go to a longer term view in terms of investing, and I'm not saying there's not trading, I'm not saying that there's, not a place for that. There is. I think there's specific type of investors and there's specific type of strategies that make sense. And even in my portfolios, right? There's probably anywhere from 5 to 10% of my portfolio that it can and does get traded. But there's 85% of my portfolio for my clients that is long-term value, that we're looking for performance over a cycle. And I believe that with the SEC moving earnings and reporting further out, especially in the day and age where we're an on-demand society, I think it helps you look at how companies are performing on a longer scale. I don't think 90 days is enough to really see certain implementations in terms of corporate strategy play through and to see how things are. Now, clarity and understanding, sorry not to use clarity, we were just talking about the Clarity Act, but to have a better understanding of earnings and where things are moving, it's nice to know, right? We all like it. We all like to hear from the CFOs and the CEOs every 90 days to get an understanding of where companies are and where they're positioned and to justify the decisions they've made. But I think that on a new regime where you're thinking further out and longer is better for everyone, and it decreases some of the volatility in the markets and lets some of these longer term strategic management decisions play out to see how they're actually being implemented and what they're going to look like longer term. So I'm a fan of it personally. Now I don't know what that means from actual disclosure and what it's going to look like because the market's used to a 90-day cycle and a quarterly cycle. If there's going to be some kind of like updates from CEOs that don't say as much but still give you some understanding of where they are because that's what the market wants, I'm not sure. So it remains to be seen, but it's interesting. In terms of the move today, I think it's just a little bit of sentiment reversal. I think people are tired of seeing portfolios drop down. I think there's been some different things on technicals that we've already seen that people are saying, look, there's some value, and we just heard that from David talk about how people are kind of saying, look, maybe we just made enough in these chips or some other areas, and said there's some really screaming value in some other sectors. And I think just the market's got a little bit tired here. It's the dog days of summer, and I think people are saying, look, where's this? There's a place to put some money. I've seen some value, whether it's in Bitcoin, some other areas. I'm not saying there aren't other factors such as the Clarity Act and things like that, but I think things have dropped to a level and people have moved to the sidelines out of some other names and taken profits that it makes sense. And then we're hitting up against the top level of where we were mid-war in terms of rates. We're hitting that 460 level. 463 is kind of the top where we got to. So I think the market's just kind of saying, look, there's some value here, and people are jumping in.
Super. Thank you for that, Andy. On the theme of kind of buying what's out of favor or what is out of favor, we've spoken about the pizza industry being out of favor. Pizza Hut, owned by private equity, Papa John's, private equity. We had reporting out from Domino's. They reported higher profit, same store sales slowing, and just evidence that the K-shaped economy is real. The same store sales increase only 0.1%. K-shaped economy is real. B at the same time, consumers have a lot of options, and pizza has not been their go-to for some time now. On the flip side, Jersey Mike's, we've spoken about the IPO that's coming, an absolutely outstanding investment, probably made easily 50%. Blackstone did 50% on the total enterprise value from 8 billion to 12 billion, and just the cash in was just a sliver of that 8 billion. So the cash on cash return is going to be ridiculous when it comes to this. Um, another victim of the K-shaped economy elsewhere in the world. We've also spoken about Ryanair. We've spoken about discount airlines. They reported earnings, lower fares, fuel cost headwinds, profit drops there too. Dave Nikoski, when those bottom of the K businesses start to bottom out, please let us know. But for now, on the fundamental side at least, it is a challenge. In the M&A world, we have consumer-related M&A, a deal announcement today out of two private equity firms, effectively. Carl Icahn's holding company is going to sell Pep Boys to Mavis Tire for about $700 million. I wanted to ask Brandon if you know enough to comment about the tie-up with Archer Aviation, which is the electric vehicle takeoff and landing aircraft company that a lot of people in this space have tweeted about in the past, and Anduril, which is largely known as a defense technology startup. They are coming together to develop an autonomous takeoff and landing platform for defense and commercial applications. Archer has been largely touted as a consumer facing business, I think. People are getting excited about the upcoming Summer Olympic Games, where Archer is going to ferry people between stadiums and things of the sort on the West Coast. But now, if it goes into the defense business, it's a whole other aspect of its business. And Anduril is certainly a very formidable partner when it comes to that. Brandon, any thoughts there?
No, I'm really, to be honest, I don't know enough. I know enough about Anduril. I think that I think that they're an amazing company. And I'm a Palmer fan. But yeah, as far as that specific situation, no, don't know enough to intelligently comment on it.
Okay. Archer has had I mean, it is a very volatile stock, as with the entire industry. But the stock was a big gainer yesterday. Also, in terms of more nascent companies, Lucid, Lucid, the EV automobile maker, about which there was rumors that it was planning for bankruptcy. They denied it, and over the last 3 days, the stock has come back up 60% over the last 3 days. Um, in more earnings news, Swatch, the watchmaker, profit dropped. Better sales for the half, but profit going down, stock going down. Novartis, not a name that we cover a lot in the pharma space here, but nevertheless, sales growth for the second quarter. Um, I'm going to get to Anas in a minute. I also wanted to mention one of the stories coming out of the World Cup was the fact that neither team in the finals wore Nike, which has been it's had a whole host of troubles. We cover their quarterly earnings when they come out, difficulties turning its the business around in China, um, and both of their teams played in the consolation game in France and in England, but the fact that they didn't have any exposure in the finals has been written up as being a ding against them, and so Nike not catching any breaks in the recent days. Brandon, go ahead.
Yeah, just before we get to honest, one thing I'd like him to maybe speak on if he knows anything about it is there was an Amazon data center that was attacked overnight, I believe it was, and then it's coming out that I guess that Iran is targeting the data centers over in that area, and they've threatened U.S. tech companies because of it. I guess what's kind of the story on that, and then what's the impact is one thing, and then the second thing I guess that I'd mention briefly is that the White House's newest AI and crypto czar has left. If you guys remember, the first one was David Sachs. He kind of finished out his term there. The second one was a name by Colin Burns, and he was there for, I believe, a week. And then that's right around the time that their battle with Anthropic began going on. And this gentleman, Colin Burns, was a former Anthropic employee. So ended up getting ousted over that. And then the newest guy, I'd have to look up his name again. He lasted about, I think, 3 weeks. It's either 3 weeks or 3 months, not a long term. And it hasn't been kind of stated why he left, but the rumor mill is just the ongoing battle about open source and potentially banning open source, et cetera. And it's kind of my thought there that nobody wants to be associated um, with the potential decision to banning open weight models. So that's kind of the rumor that's going around, and that's my 2 cents on it. I think the White House came out and said they aren't currently looking at banning those models, but from everybody that I've spoke with, that's kind of involved in that area in DC, has said that it is an ongoing conversation. So those are just a few things I wanted to cover this morning.
All right, Anas, are you ready to give us the update of the morning, or should we wait a little bit?
Good morning. No, that's fine. Good morning,
Okay,
everyone.
before you start, Joe Carlisari, don't go anywhere. Stay with us. I have to get to you also. But Anas, go ahead.
It is still early morning hours here in Vegas, as you know, because of the time difference. But I'm jet lagged anyway, so I'm waking up early. There are several things today, and it seems like it feels like, yeah, there are too many coincidences, but sometimes you feel like as if someone playing everyone. We talked yesterday about the Houthis basically announcing blockade on the Saudi oil, etc., in the Bab el Mandeb Strait. And before that, of course, we know what's happening in the Hormuz Strait. And yesterday, the CPC terminal that where Kazakhstan export their oil basically was hit and closed. And today we are getting the news that Panama Canal is having some serious problems because of low water, and there are fears basically the situation can get worse. So you are talking about three major waterways. Call it a coincidence, call it conspiracy, call it whatever you want. When we start looking at waterways like this, I think the whole business model of every company will change in the future as a result of that. Oil prices are up by more than 1%. Brent is above $90. Regarding that center in Bahrain, the news came in out of Iran, so they publish a lot of fake news. We don't know, but it could be true. The center basically is for Amazon for web services. Uh, and this issue of Iran hitting American companies in the region being raised in March, basically, and what is the impact on the region? The fear at that time was that American expatriates, especially the top experts, whether you are talking about AI or any other fields, the fear is that they will leave, and the region needs them. So, aside from the physical destruction of facilities, even if you don't have that destruction, the fear that those expats from Europe, from the United States, from Asia, those who are really needed to build the Gulf nations basically and help building them, they are going to leave, and that is a crisis for the area. Um, Going back to the Houthis sent a message to ship owners telling them that it's not only that ships that are carrying Saudi products, including oil, are banned basically or embargoed. Any ships that are calling at Saudi ports basically will be banned too. Here's the problem: the Houthis do not have the capabilities to have access to the ship owners and to their emails and send them emails. The one who had that is the IRGC. So you can see that it is not the Houthis who are acting as much as the IRGC taking over the Houthis in these decisions and those capabilities. We don't know really what's going to happen in Bab el-Mandeb until today. There is no clarity whether we are going to have the Saudi oil going through or not. As I mentioned yesterday, the big winner is Putin because his oil will go through. The big winner is India because they are going to get the oil because they depend on Russia. Even if insurance companies cancel the insurance, this will not affect the Russian oil flow. There were attacks on Jordan and Bahrain in recent hours, and targeting those two countries. What is common among those two countries? They are both U.S. allies, and both are the poorer countries of the whole region. And the what is the objective of hitting those targets, etc. We don't know. But what the Iranians are missing basically is for smaller countries, and I don't like to delve into politics that much, but what they are missing is smaller countries, when they get attacked like this, they have no choice but to have more alignment with the United States. So they are bringing, in a sense, more American presence to the region, and the Iranians are kind of missing this point. To change course here, grid operators in the U.S. central states, I'm reading a headline here, warns of potential rolling blackouts. Now, we heard this last week when we talked about the Northeast and the heat wave. And it is very clear that politicians in the whole region, along with the media, are not telling the whole story. The same thing that we talked about last week. They say, okay, it's a heat wave and it's data centers. And they ignore the fact that The weather is hot because there is no wind, and if there is no wind, there is no wind energy. And therefore, this massive decline in wind energy, how you are going to compensate for that? And that's where you end up with blackouts. And the problem is, in many places, including Texas, for example, wind is given a privilege that others don't. So when they do the dispatching and you have to show your commitment to tomorrow or next week, if you don't fulfill your commitment, you will be punished. But wind is not punished in this case. So they can come up with any number, promise any number, and then don't deliver. There is no punishment for the wind. But if gas producers, basically, or coal producers or others do it, they will be punished if they don't deliver the amount they promised. So this is one of the problems that we are having.
But
The
on that point, right? Wind energy up in the Northeast is really such a small percentage of the overall power generation. I don't know if it's worthwhile. I mean, yes, sure. If it was a big part, we could scream at the wind all we want. But since it's less than, I think, 5% even, like it's not really consequential.
It's
And
not really the percentage because if you are short just one unit, you are short one unit. So it is really, remember, economics is the marginal science. Everything is at the margin. So even that 5% or 3%, whatever percentage is, it's not about the size of it. It's about that you are expecting 5% and it's not there, or expecting
understood.
5% and you get 3%. So that's where the issue is. But for the Northeast in particular, the problem is compounded with other things. For example, and this is kind of one of the most ironic things about the Northeast. The Northeast basically is not rich. I mean, if you exclude parts of New York and Pennsylvania, it does not have energy sources like Louisiana and Texas and Oklahoma. So they have to import natural gas. And because they are too liberal, they don't want to build pipelines from Pennsylvania and other parts of New York. So they have to import LNG. And the United States is the largest exporter of LNG, but they have to import LNG from other countries like Trinidad and Tobago or other places. And when LNG prices are too high, they cannot import LNG. They have to look for other substitutes. And now LNG is going to Asia. No one wants to send to the United States or send to Europe unless you pay the high price. So there are other sides to the story than just wind in the Northeast. So that's part of it. The last, basically, there are two issues here. Abu Dhabi or ADNOC, um, that's Abu Dhabi National Oil Company, announced today that it has taken the FID to invest $6.2 billion to develop Shaif gas field. Um, with Eni and Total. This is, if you look at what ADNOC have been doing in just the last 3 4 weeks, just amazing. And this is important because if you look at their announcements, almost all of them are in gas, natural gas, natural gas, natural gas, LNG. And this proves the point that those who are saying that natural gas is a bridge to the future are mistaken. Natural gas is the future. So you look at those massive investments they made. And there are two points regarding this one. The first one is if the emphasis is natural gas, just like Qatar, now you understand the decision why they left OPEC, because OPEC is about crude oil. And those guys, Qatar left, they are LNG. And now the UAE is going gas and LNG. So this could be part of the decision why. Of course, there are many reasons, but this could be one of the main reasons why. The other thing is, and this is kind of very, or there's a question mark here, and at the same time, it's interesting that those investments, the previous one and this one, they are made in areas inside Hormuz, inside the Gulf, which means that seems they are not concerned about the future of Hormuz. And that is a very important point. And look who is investing. You are talking about the oil majors, especially the European oil majors, are investing in the area. Those guys basically they have access to intelligence, they have access to governments, etc. So to invest these amount in the area, it tells you that probably my views about Hormuz being poisoned forever, etc., may not be correct, because why they are investing inside this area, unless of course they are going to ship everything to the other side of Hormuz, and that's a completely different story. But those major investments made by the UAE might prove me wrong by saying that Hormuz is poisoned and we will have the ghost of Hormuz with us all the time, or for the rest of our lives. Because why they are making such massive investments with the help of the oil majors who have all access to intelligence from their governments. Back to you.
Thank you, Anas, as always. Andy, I assume you have something to say to Anas?
Yeah, just honest, I'm just curious. With the attacks going into some of these other countries, I know some of them are poor, but the fact that even that they Iran's attacked Saudi Arabia at different points, there's been attacks to UAE, etc. Why haven't they organized at all in terms of any type of military or air or etc. To fight back? And I'm just curious why it's still been the U.S. kind of alone. And are there things in the background happening saying, look, we may not put actual citizens or technology or drones to work here in terms of what you're doing, but we'll fund, right? We'll help pay for missiles, etc. Like, what's happening on the military front with these other countries?
Anas, did you hear the question?
Yes, thank you.
Okay.
I am definitely not the expert to answer this question, but I will tell you what I heard and read. The first fact basically is this, that there were experiences with the United States historically where those countries they know that Iran is literally attached to them forever, while the United States is not. So you cannot basically go fight the Iranians, cause all kind of wars and problems. Then the U.S. would withdraw from the area, and then they get stuck with the Iranians forever. We've seen that, for example, if you look at the case of Iraq and Kuwait. It's still a problem until today. The problem is not resolved. So that's number one. Number two, that from day one, basically, they said this is not our war, and why I got to be involved in someone else's war. So that's another point of view. Notice that the issues for those countries are not only Iran. And that's the last point, based again on my readings. It's not only Iran. They have problems in Yemen and they have problems in Sudan. And you've got to look at the whole region together, not only Iran, because everyone is involved in each. And I think the Houthi problem in particular is really the bigger problem right now for those countries, because if it explodes, it's going to be a big problem. Uh, it could be, and this is kind of speculation, but it has to be said that the IRGC basically are taking over the Houthis, and the problem is the IRGC might leave the Houthis one day, and then the Houthi role in Yemen will end completely because of the massive attacks by the Arab coalition and the United States and probably Israel to just finish them up and finish this threat forever. So we'll see what will happen.
Excellent. Thank you, Anas. Joe Carlisari, want to get to you, and then I'll get to Nikoski and to Joa. First of all, thanks for joining, Joe. It's been a long time. Hope you've been well. Hope you're enjoying summer.
Yeah.
Thoughts on, if you would, Paramount, Skydance, Warner Brothers, antitrust activities at the state level, and then also Clarity Act and anything else you'd like to discuss.
Yeah. So let's talk about really fascinating. That's actually why I jumped up the Warner Brothers. I don't know how closely folks have followed it, but people alluded to earlier. I think it was Carlo about the idea of the sort of laissez-faire, approach with the government, and I I sort of slightly disagree with that, given the extent of their investigation and the detailed decision making they made. And if you look at the state's analysis of the deal versus the Fed's analysis, really the central disagreement between the two is how do we define the entertainment industry? How do we define the entertainment market, the collapse of the studios versus distribution versus streaming? And I think it's fascinating the state's argument that was advanced. And for those that aren't familiar with the process here, when you file a temporary restraining order, you have to prove likelihood of success on the merits. The judge is going to, make a sort of initial determination based on the papers. Is there a substantial likelihood of success? And the states advanced, three separate theories. One was this, top-grossing movie theory, how the movie market was going to be defined. The second was the cable streaming argument, and the third was just overall, disruption of the theatrical distribution market. Well, the only one which was the basis of the TRO order was that latter one, the last one I just mentioned about the distribution as a whole to the theater market. Now, what under the Clayton Act, if you get one portion of it to be insufficient or inappropriate, you can block the entire deal. So that's the argument the states are advancing. So the states are obviously trying to block the entire deal. And to be clear, the DOJ did not green light it. There's no approval from the DOJ during their review. It's more just that they just closed their investigation. So where do we stand now? We got this hearing coming up. So you get a 14-day, you get to brief it a little bit further, then you get the hearing in Oakland on, I think, the 4th or the 7th. I can't remember the date, but early August. And the fascinating thing is that if they prevail, the states prevail, and they get the PI the preliminary injunction granted, then it gets really expensive for all the participants. You got this contractual regulatory termination clause, which is potentially a $7 billion hit that takes place in. Sorry, someone's got a hot mic. That takes place in I think September when that hits. And then beyond that, the whole thing can continue. I think till June is when the termination goes next year. But the interesting thing about it is what the DOJ was saying, and I assume Warner Brothers is going to pick this up at the hearing. Their argument is look, you have to view entertainment industry as a whole, and the real competitor to theater distribution, which is what is the purported basis for blocking the deal. It's streaming. It's streaming is eating these guys lunch and at-home distribution. So for you to just states to be focused on just the theatrical distribution and not even the top movie theatrical distribution, but just the overall, that's going to be a tall order. And it's going to be, fascinating to see how much weight the judge puts on that in granting or denying the PI. Obviously, if there are plenty of situations where a judge gets the papers in and say, look, there's a substantial likelihood of success, but there are factual questions that I need to develop at the hearing in August. And they could easily say, no, let's handle this in the ordinary course. I'm not going to block the deal, and it goes through. That's a massive win. That's going to be huge, and the stocks are, going to react violently upward from that. The opposite is also true. If the PI gets granted, that causes extreme pressure, potentially, like I said, the regulatory $7 billion hit that could get hit in the termination clause in the contract. So yeah, really high stakes litigation, perhaps the highest we've seen in a while in the merger and space.
Outstanding, Joe. Certainly, and all this is happening against the backdrop of, remember, Spirit Airlines merger was busted by the previous administration. That company went into bankruptcy. Amazon wasn't able to buy Roomba. That company went into bankruptcy. Last administration chased handbags, the combination of Coach and Jimmy Choo. It is an interesting case study, and it does speak to whether, as general approach, right, as you said, yes, the technicals of legal arguments are what they are, and the case law is what it is, and so the arguments need to be made inside of those confines. But at the same time, the markets for a lot of these products, quote unquote markets, are really amorphous, right, because of technology. It is, ever broadening. What was considered the market can easily not be considered the market just a little while from after the decision is to be made. So we'll keep everyone posted on the developments there. And Joe, thank you for joining, and thank you for the input. Joa, good morning. Thanks for joining. Go ahead.
Hey, good morning, guys. I hope you don't mind me going back a second because I have a question for Anas. My whole investment theory is that the West is trying to move the LNG energy corridor to the West in order to reprice the dollar, and that China's trying to force the real price of gold. But something really strange happened, and I hope Anas can shed some insight. Although I think he just dropped, but hopefully he can hear my question. Um, he left, didn't he?
Yeah,
He
he
did. He might have to be on TV.
Okay.
He's an in demand kind of guy, as you know.
Yeah, maybe someone else knows, but something strange is the fact that there's a Serbia 2 pipeline coming from Russia to China that China was supposed to close. They never ended up funding it. And that's what was supposed to happen that week right after Trump went to China. But instead of China funding that, they invested $10 billion in Louisiana for the LNG fields and started shipping LNG from the US, which is strange to me, right? Because they could get all their LNG from Russia. They wouldn't have to go to the US. And a lot of people think US and China are in this war, which we are kind of, but then they're doing deals like this, which kind of show that almost like there's an agreement, more so than a conflict between each other. Um, I don't know if anyone has any insight here. Anas would have been perfect for that question, but oh, he's back on listeners.
I'm bringing him back up.
Thank
Just a
you.
second. Anas, did you hear the question? I'll repeat it for you. Joa asked about that. He says that China is investing in Louisiana, a project for nat gas, instead of the new one with Russia.
The
Yes,
Serbian 2 pipeline.
the timing is important, and the sequence and the scheduling is important here, how it works. But for China in particular, they need that leverage no matter what. And we have several
Political
examples in
leverage,
history.
Anas? Politically? Yeah.
Yes, yes. Politics through economics, in a sense. So we've seen basically China investing in the United States, buying oil and gas from the United States, and then literally in one day, they decided, I'm not going to buy from you anymore. But what is the beauty of what the Chinese did, and this is kind of incredible, and I know that the Trump administration does not want to talk about this. For a period of time, when the Chinese stopped buying LNG from the United States, we have a crisis in Europe, and prices were very high in Europe of LNG. So what the Chinese did, the Chinese, because of the contracts they have with the American companies, they literally shifted all the shipments to Europe. And the arbitrage basically was made by the Chinese companies, not by American companies. So they literally made money off Americans by shipping their LNG to Europe. So there is a leverage here on several fronts by investing in the United States. As for the Russian deal, the strategy, the Chinese strategy, even without Hormuz, basically is very clear since 2019. And Hormuz just emphasized the same point. Since 2019, the Chinese basically were convinced that the West, that Europe and the United States, will either launch a war on China or impose an embargo that will involve closing the Malacca Strait. And what we've seen basically as a result of this, we've seen that the United States taking over the Red Sea. The Chinese looked at it as, wow, what's going on here? Because whoever controlled the Red Sea can control most of the trade coming out of Asia anyway. And then now we have Hormuz. China knew in advance these things are going to happen, so they prepared for it. The problem with the Chinese preparation is this: they are just jumping into Putin's lap every time there is a problem. So you want to talk about the pipelines, you want to talk about the LNG coming through the northern route, etc. And this Chinese Russian cooperation is good and bad at the same time. Is bad for the United States and Europe because the increased cooperation among those two giants basically is dangerous, but it's dangerous for them too, because any conflict between those two or any problems between those two is going to cause problems to both of them. And both of them realize this fact. So what Putin did And now you got to realize what's going on. There is nothing in isolation here. Think about it this way. Putin realized that he does not want to depend on China. He lost Europe, and he does not want to depend on China. So he adopted two policies. The first policy is to diversify gas exports. Therefore, he thought, okay, if I focus on LNG, I can send that LNG anywhere in the world. And he built the LNG plants. And he did not realize the power of the United States, so they imposed the sanctions on those plants and all the tankers involved with them. And the second one is he realized, and I remember those when Lavrov basically was going to those small African countries, visiting with them, telling them to buy Russian diesel and Russian gasoline. And the reason why, because they learned that, okay, I have crude, it's sanctioned by the major consuming countries. I need to sell it. And they tried to sell it, and they found out that most of the buyers, especially the smaller countries in Africa, Latin America, they have no refineries. And therefore, they are not going to buy the Russian crude. So they said, okay, I'm going to refine it in Russia and send it out. So I'm going to diversify LNG and I'm going to diversify oil. And both objectives were hit by the United States. The first one, the LNG by sanctions, and the second one by allowing Ukraine to hit all the refineries that's supposed to send those out to other countries. So both objectives basically were hit. And this puts Putin in, in China's lap in this case. And China knows that. So they are milking Putin as a result of it. The problem with China is everything they have right now and all their plans are for short and medium term, which means that if Hormuz Strait stay with us for the next 3 years, guess what? The largest loser in the world is going to be China. The economy that's going to be destroyed if this is going to continue is China. They protected themselves for only a period of time, but they cannot protect themselves after that. And that is one of the big problems. Back to you.
And that's just a follow-up question. Do you because I look at this and look, hitting Ras Laffan was kind of foreseen for many years. Like almost every attack US did, they kind of knew what the counterbalance would be. He dropped again. Okay, I'll save it for next.
He's still up for me.
Well,
I
Uh,
am here. I'm still here.
okay, okay. Do you give any credibility to my theory that this is all to just move the LNG corridor to the west?
I can tell you, you will be surprised to know that I was the first one who wrote those issues long ago. And you can go back and see my writings on LNG wars. So just you can Google it, or you can see my presentations on this long ago. Basically, I've been talking about
Yeah,
the LNG wars, and the
yeah.
LNG war
It's a way to
started.
reprice. It's a way to reprice the dollar. It really is to get rid of our debt. Is the way I
Well,
kind of see it.
I don't take it that way. I don't take it that way at all. I take it from the energy dominance point of view, and because if you go back and look what happened in 2014, because the whole
Mm.
war, the whole energy war started in 2014,
Yeah, I've been following it
and
since then. To be honest.
yes,
Yeah.
so that's really what happened. And if you go step by step, and you can see what happened, the problem is, and this is one of the most ironic things, that Putin seriously thought that in politics there is some morality and there are red lines. Putin, the guy who you think that he will have no red lines, and that was his biggest mistake. He lost because he thought that Europe and the United States will have red lines and they are not going to cross them, and he really misjudged that. Back to you.
Thank you, Anas. And thanks, Joa. On the topic of China, I did want to mention that there is news out that the U.S. and China are going to hold talks over AI in September, being reported out of Reuters. That is going to happen supposedly before Xi Jinping's planned visit with Trump on September 24th. So earlier in the month, there will be talk whether the United States has its own policy on AI is left outstanding, let alone figure out a policy jointly with China. I'm sure that there will be all sorts of very interesting sound bites that come out of those meetings. That certainly will affect everything we talk about here, and also investment in those fields. Anas, go ahead, and then I'll get to Gary.
I just want to mention something important. The amount of crude, not total oil, that goes through the Bab el Mandeb is about 6 million barrels a day. The media is reporting a number that is lower. And the amount of Saudi oil going through there is about 3.5 to 4 million barrels a day. This is an extremely significant amount given the losses we had before. So if in any case this is only delayed, so I'm not talking about even blockade. If this is just delayed for a few days, this is going to wreak havoc on the market, and we might see other increases in the oil price once this is confirmed.
Awesome. Thank you, Anas. GC, good morning, sir. How you feeling?
I'm good, thank you. I'm going to do a hard pivot, if you don't mind, off energy, which I always
All
find fascinating. Honest, thank you very much for accurate reporting. Um,
all you, all you.
well, it's beginning to happen, ladies and gentlemen. I think the crypto industry may be starting to heal itself. Jack Mahler of Strike has resigned from the board, so he's going to run. Uh, Maybe correct me. Am I confusing these two companies? No, I don't think so. So he's stepping down. A guy named Zaguro. Is that right? Have you guys seen this news? Anyway, my point is, I think a lot of these founders are really exhausted in Bitcoin, the whole crypto industry. I think we're going to see a large rotation of people. I don't know how this actually works in so-called decentralized entities. It's going to be fascinating to see how all these. There has to be a rotate. I think there has to be a rotation of people to refresh the player list. You know, it's these guys have been in this for 8 years plus. They've made probably some decisions. People have been placed in roles that may not best fit them with their past experience. It's interesting. Crypto is really kind of blown off experience is unnecessary. I think that's probably going to come back in fashion. All these guys at some point have to figure out how to make revenue, man. I remember meeting a guy who's an investor in Mahler's first business. And I said, hey, what's that like? He said, hey, he's a great guy. He just needs to figure out how to make revenue. And I found that was 4 years ago, 5 years ago. And I thought that was a very astute comment. And it's still 5 years later. These companies have to figure out how to make revenue. And I'm not sure the CEOs that are in place know how to do that. So I think it's probably a good thing that we're seeing here. Love to hear some commentary on it though. And we're seeing the market start to respond well in crypto. That's pretty cool.
So I will agree with you on the turnover point. I'll also say that if you're if you have conviction, the real conviction is that you hold through it all. Yes. So the Jack Mallers was supposed to be the head of 21 Capital or XXI Capital, which was going to be a digital asset treasury company, which let's call a spade a spade. At this point, the only digital asset treasury companies that have any relevance in the world are Strategy and Bitmine, right? Tom Lee and Ethereum, if that much, right? I think everything else has fallen on absolutely hard times. I don't think they're ever gonna come back. They'll come back to the point where the price of their whatever they own is gonna rise. But in terms of being an industry, a business, I don't think so. I think boards of directors are gonna get bored. I think shareholders are gonna get frustrated. And I think, this concept of raising limitless permanent capital just to buy a single asset, it's gone. It's over. We played that out. And I think, a guy like Jack Mueller is not that I know him personally, but he's simply throwing in the towel on something that is clear. 21 Capital is never going to become Strategy 2.0. It just can't at this point. The market doesn't have the ability to support, or doesn't even have, it doesn't even want to support potentially Sailor, let alone something else, right? And remember, 21 Capital was backed by Tether, backed by SoftBank, backed by Cantor Fitzgerald. So it wasn't a joke of an enterprise. It had a lot of backers. It just was a little late to the party, and the party is now over. So, and I don't think that party is coming back. So, yeah, I agree that, a lot of these folks that own DATs are going to have to figure something else out to do. And I think it's good, Gary, to come back. Just one more point on this. It's good to come back to simply what needs to stay around. I think strategy needs to stay around. I think the fact that the market is now comfortable with Sailor buying and selling Bitcoin, that's a good thing also. And we can all move on from here. We can all move on past what was technically, right, I'm sorry, not technically, it was a technical sideshow, right? While all sorts of fundamental stuff was happening, right, which we've chronicled ad nauseum, and Carla and I have cried over, and whatever, that it hasn't come to pass in terms of price appreciation. But I think at this point, yeah, there is a lot of good fundamental progress that has been made over the last boatload of months at this point, that hopefully with the passage of the Clarity Act, and yes, a bunch of reshuffling of chairs and people bowing out of the industry or bowing out of their roles, will help reinvigorate the asset class. So I totally agree with you with respect to the new blood. We got to move on. Crypto has to march higher and so forth. All right, Brandon, to you, then Timothy, and then Joa. Go ahead, Brandon.
Yeah, just a real quick story that goes along kind of with this is a startup just raised 30 million more funding. I think they have around 45 million total in funding to reinvent the payments for AI agents and like kind of reinvent the rails there. And I thought it was an interesting one. It's called Natural. And so it goes along a lot with what Carlos talked about recently. They're, I think they're being a little ambitious. They're, kind of marketing is they want to take on Stripe, which, more power to them, but also at the same time, good luck with that. And then one final point that goes with the AI and the regulations and how we've talked about the potential banning and this ongoing back and forth and war with China. Um, Scott Besant just was on Fox News a little bit ago, and this was his quote. This administration supports open source models, but what we do not support is IP theft. If we see, especially, that overseas models are stealing from our great companies, we have the ability to sanction them because of this theft. And, for those of you that have listened to this and kind of followed along with the story, I highly doubt they will do an outright ban on these companies, but they can ban them in other ways, technically, whether that's sanctioning them or, as I think I talked about yesterday, putting the onus on if there's any issues on the neo cloud companies, and if there's some type of funny play that goes on, then the neo cloud providers will be the ones that take the hit, or the penalties and the punishments. And so essentially that would mean the neo cloud providers would say, we're actually not going to host these open source models because they don't want to take on that risk. So that's kind of their way of doing it. And it seems like the White House is, playing a little bit around here. Like I said, they came out and said that they're in favor of these open source models. They don't want to ban them, but then in the same breath, they're saying that well, we will look for ways to sanction them or whatever. So, and it's kind of funny to say that this morning because this comes off of yesterday's ruling that Anthropic has to pay $1.5 billion to these book publishers that they stole information from. So, I mean, it's literally the largest penalty that's ever come from a case like this, and in history, $1.5 billion penalty. This class action lawsuit, and then they are good. It's the same people that are coming out and saying that China's distilling their models. And so, yeah, I don't know if the hypocrisy or what even the right word is there, but other than tomfoolery. So, yeah, that's just the quick things I wanted to cover there.
Thank you for that, Brandon. Since we're jumping back and forth all over the place, crypto AI, and you mentioned Besson. Besson also said that the Treasury has frozen 130 million dollars of value in a crypto wallet tied to Iran's IRGC. Carlo, in your face, Elizabeth Warren, about crypto being the currency of choice for all criminals. There you go. It is certainly easier to go ahead and track and sanction than even money moving in international banks like HSBC and Deutsche Bank, who have in the past unknowingly, quote unquote, been involved in of support of criminal enterprises. All right, Timothy, to you, and then Joa.
Yes, thank you. I just wanted to direct a question to Gary. Actually, I opened up the space with talking also about the changing sentiment in crypto. Gary, I know you're a big advocate of putting your money where your mouth is, so to say, so that we don't just speak about like what you really believe in when you put some money into it. So I started building a position again in crypto since October last year because I have the feeling that the worst behind us. I'm curious to pick your brain and to see if, obviously you mentioned you also see a bit of a sentiment change. Are you already at a position where you're also deploying some capital again, or are you still sitting on the sidelines for now?
Well, I would differentiate crypto from Bitcoin. I'm still very uh, optimistic over Bitcoin. I think, to me, the whole market is really geopolitically is really set up very well for Bitcoin. I said this about maybe 6 months ago. To me, Bitcoin, if it didn't perform 6 months ago, keep in mind, okay, I said about 18 months. If it didn't do something spectacular, I would have to rethink my thesis on Bitcoin. So we got another 12 months, at least for my time frame, to have to review it. I haven't scaled out of any of my position. I have added here. If I had a large amount of money, would I deploy all of that here right now in Bitcoin? I'm not sure I would do full deployment. It's pretty clear to me now that Bitcoin is going to be a part of a portfolio. It's not going to be, 80% of anyone's portfolio. It doesn't make sense. Um, Maybe if we'd have gone in a slightly different direction on the Clarity Act without all this tension. But I do think I've seen these washouts before where, and by washout, I'm not trying to be offensive to anyone, but the Jack Mahler thing for me is really important, okay? To see rotation in people now, that is a very healthy, very mature. We're fixing mistakes we made. Like when that guy was placed in office, I would have bet $1 million. That guy will not last 2 years in this position. Uh, like Wall Street's different than crypto, man. It's very, very different. The players are different. They think differently. They think in different time periods. I think this will be very, very good for crypto in the end. So yeah, I like it here, man. I like 60,000. I do think Bitcoin's going to have to get tested again in the low 60s, just to get us. We need this foundation built really strong here, in my opinion. So I think there's opportunities that should be interesting. So
And if I just may ask a follow up before we move on, so some of the other projects you're looking at. So you mentioned crypto as a whole space. What else are you looking at? I took some positions in Solana, Link, Ethereum. Ondo is also quite an interesting project in my opinion. I think these are some of the more real projects with real business behind it, some good cash flows, etc. What else are you
tell
looking
me,
at?
tell me what crypto thing has good cash flow. Not to bury the meeting into one specific thing, but I mean, I think those
I
companies that are free cash flow should do well. I think there's going to be a run on free cash flow companies. I'm having a discussion today on 4 companies that are free cash flow, and those are the kind of companies that should be looking at crypto. They're going to be able to bring something to the table that other companies can't bring. I just don't know any of these companies that are generating revenue with a recurring model and good high credit customers, man. Like all of that is part of the equation of a good business model. Recurring, earnings growing, net income expanding, business is getting more efficient, and the credit exposure of those companies is improving. And like, give me one case. Like, I own a company called Node 40. Okay, it's a private company. We are doing stuff in crypto right now that is absolutely fascinating. Nobody knows about it. Now, I love those businesses. Okay, absolutely love them. They're you can't buy the stock. You know, it's a little private thing. It's trying to find its way into a market that needs reporting, and no one knows how to do this stuff. So to me, those kind of businesses are really cool, but they too have to figure out how to make revenue, growing revenue, and how do they squeeze a margin out of it.
Yeah, I think what Gary's getting to right there, and just is an important point. This is why SaaS has always been such a great model. Like the recurring revenue, you need recurring revenue, and that's just why historically I would say SaaS has been such a great investment. Obviously, we're starting to test that now as AI has kind of changed the markets, and we're getting more into tokenomics. But that's why, to me, I mentioned it a few weeks ago, or maybe a month or so ago now. I pulled out of crypto. It just didn't make sense to be in it, and it didn't. I didn't see this improving. Maybe with this rotation of players in the game, and more people that are more sophisticated, that have run businesses in the past, that's great. But like, when you looked at so many of these businesses during the 2020, 2021 era, even the NFT stuff, I mean, you were getting kids that had previously, handed out hamburgers at a drive-through, that were now getting handed hundreds of millions of dollars, and to figure out how to sell a picture of a penguin, and they just couldn't get the revenue, and there was no type of recurring revenue that was involved in that, and they were bad businesses from the start, but still hundreds of millions of dollars were poured into them.
This is way too much crypto talk. I already hear Dave Nikoski putting on his shorts. Please stop this. You'll ruin my day. Dave Nikoski isn't even listening. He's so busy putting on the short positions.
I'm here. I said I think Bitcoin is a near term bottom for sure. But it's not about, again, it's about money flows, period. And you can look at technicals all day long, look at relative strength. It tells you a lot of what's happening in the market. If you're going to lose money in tech, or you can buy Bitcoin and have a liquid asset, I think that's what we're seeing. And I think you're seeing that in a lot of areas in the market that are coming off the floors. You look at everything from nursing homes, and many of us in here are not in the baby boomer generation, but we're getting up there. They're absolutely killing the market. Like uniforms, look at Cintas. There's just so many names that people left for dead while chasing something into infinity. And you know what, it's spreading out. It's just a process of money flow going back to the things that were sold. I put a post up a few weeks ago. You remember every old economy stock you sold? Yep, you made the bottom. Okay. I mean, that's literally what's happening right now in front of you. And everyone wants to know when the tech bottom is. I don't care. I am finding so many ideas. Financials were way underperforming. REITs are breaking out. And I'm not even a fan of the REITs because I think there's a lot of markdowns that are being taken. I follow Nightingale Associates. I'm seeing buildings going 80, 90% off. The banks don't even want them back. They're letting some of these businesses run without even getting a payment, because if they take the building back, they got to show that write down. So they're just extending the payment and sending it, adding on duration to these things.
Extend and
Because
pretend, my friend. Extend and pretend. It's an age old
exactly.
game. Been doing it for
Yep.
40 years. Ain't gonna stop.
Well, you know the real estate business 10 times better than me, but when I dig into it and I see some of the comments out there, and I know a lot of people in the bank industry telling me that this is going on, you know, the banks don't want these things back. The market's not there for them. They have to take the mark down at some point unless there's a recovery in, commercial real estate. I don't see how you can kick the ball out so
Problem's
long.
too big, David. Problem's so big.
Oh,
I
I
think 2 years ago,
yep.
Grant and I had an argument. I'm like, Grant, commercial real estate ain't coming back. I know that's not what you want to hear, but nobody's going back to the office that's a high producing asset for a company. They're going to say, fuck off, HR. We'll do whatever we want.
There's some that are going to be safer, like
But look,
healthcare. You're going to have to visit a
this
site,
problem is
right?
so large, dude. Like it involves everyone. There's not going to be a markdown. They're just going to extend and pretend the whole time. They'll push it out for 5 or 6 years, and we'll get through it. You can't collapse the commercial real estate market. It would destroy everything.
Yeah, but I'm saying there's safer
Yeah. Oh, I
areas
agree
in
with
it,
you.
but they haven't risen until lately. You look at a lot of the healthcare REITs; they're doing great. I highlighted the hotel REITs. At the start of the World Cup, every single hotel REIT is at new highs, right? Like 3-year highs. You look at, I believe it was Hyatt or Hilton has something like 16% of their rooms are in buildings that are in default. Like I can't even imagine what that's like. And I assume that what I read was correct. So I don't want to state, something that's, unfactual, but, I read that in one of the reports that is so when you look at these hotel REITs, from the World Cup, I mean, they are just missiles. Most of them are up 100%, in the last 2 months. So, there's opportunities out there, but you have to do your work. And sometimes they're not group calls, it's individual, company calls in many cases. Again, stock picking is absolutely on fire for anyone that wants to dig into groups and see the bifurcation, even in groups where one company is doing absolutely stellar and another is getting its butt spanked. So, that's what I'm seeing from my chair as doing a bottom up approach and a top down approach. So back to you.
Thank you, Dave. Joe, to you.
Yeah, just to bring up the two topics. America, not American, but the American AI company saying that China's copying them. At the moment, I don't know how that's possible when the frontier model is Chinese. It is Kimi 3, and I'd really advise any company to start using an open model, kind of like what Alex Karp was saying. I think he's correct. You're basically training these AIs on your data when you should own that data. Um, and I think America, of course, is going to come up with something, but it's going to be to protect the American AI companies, not so much so that they're copying, because they're building it different, more efficient. And at the moment, they have the frontier model. I'm sure that'll flop back and forth a few times. As for crypto, I know it does not believe in cycles, but if you look at the last two cycles, July and August, I would expect somewhere around 74. But then you do hit a low late October, early November. And then that's the low for 1,000 days. If you believe in cycles, if you don't, ignore that advice. But if you look back at the last two cycles, that's exactly what happened. So, Gary's correct. That's, short term. I believe this is, a pop in crypto, but we'll form a new base to confirm that this is the bottom before we go up only.
Excellent. And speaking of Kimmy, Brandon, even David Sachs uses Kimmy. Now we all know how much that influences the White House and what its policy is on AI. We will wait and see. But that
Yeah.
David, if no one's used Kimmy for research yet, I really implore people to try it. It is the best model when it comes to research, like I've never seen any other model do. Like I haven't used it for programming, but for research, it just the amount of detail that it goes into and the report that it spits out is way above anything that's out there.
Yeah, I just want to make a quick point. You're right about that, Sack, or I almost called you Sacks. Tall. There's too many Davids. We got to start renaming you guys. But yeah, so as of now, I mean, like one thing I will say, Mythos is still world class. It's still the best model, and the unfortunate part about it is like these Fortune 100 companies, or a good portion of them, have access to Mythos. So they're using it. Consumers can't, and the vast majority of people, companies can't. That's unfortunate. Kimmy absolutely is. It's up there. The fact that it's going to be open weight. Yes, every enterprise, me and Nikoski talked about this a little bit last night. They're absolutely going to be using Kimmy. Barring sanctions and us putting a stop to it, it just makes sense. The cost difference is it's unbelievable. Actually, Nikosi, if you could hit on that real quick, I think it's so
It's a
important for people to
third.
understand it.
It's a third of
Yeah,
the
we
price.
discussed this last night, but I mean, if this is indeed, around that 10% of frontier models here, if you make them illegal, first off, in the US, you're basically granting everyone globally to be allowed to use this. That's an 800 to 900% increase in cost by forcing US companies to use these other models. And again, for data that is defense related, it certainly makes sense. But if you're a grocery store, a dry cleaner, or something like that gets prohibited, you are going to stop the or slow down the ramp to jump on these models. And I don't like, you're admitting that we already lost if you outlaw them. This is software. This is not automobiles like Boyd that are being shipped all over the globe. China has sent something like 3 million cars were exported last month. Do the math, guys. Like, that is unbelievable. That's the fastest we've ever seen a ramp in automobile exports from a country from where they were 5 years ago. You've never seen something like this. So I think that you have to be very careful about outlawing something. And Trump just signed an executive order requiring all of our defense companies to move away from rare minerals from China yesterday. I think that's pretty big. They have to source it locally and not from a foreign country that is in hands with the CCP. We are detaching. We've been embracing this world model, importing everything globally for 45, 50 years. And if you stop that, you better be prepared to have Americans pay substantially more for everything, like substantially. I have a BMW that has a problem. I went online, I can find a part for $40. If I get it from BMW, it's like 400. Okay. I see this with like everything out there. It's like, okay, I don't need the $400 part. I'll replace the $40 part 6 times if I have to. You know, that's my view of it, and it's nothing big, it's nothing major, and it's a simple part. So just be careful what you wish for, because you may get it.
Let me just jump in here a little bit because we're at 9:35 already. Anna still wants to speak. I will make my comments on AI another day, but most of you already know my comments. To me, this is like mainstream media speaking today. David, I give it back to you, and let's keep it short so that tomorrow we can continue.
Yeah, let's definitely do that. Anas, go ahead.
Yeah, this is breaking news. I'm going to, if you allow me just a second before you close, I'm going to put, or people can go to my account and check this out. It is happening, guys. Oil prices are going up. And I just posted a live picture of a Chinese VLCC owned by Costco, which is the largest shipping company in the world, made a U turn in the Red Sea, and it is carrying Saudi oil. It is happening, and this is very serious. Back to you.
Outstanding. Eric, I just want to know your thoughts from a Canadian perspective on the tariffs. We're apparently going to get a new round of tariffs not only on Canada but across the world. Does anyone care anymore? Is it all tacoed out anyway?
Trump just doesn't accept defeat, and he's an unhappy. Greer just came out this morning saying that Canada is giving better trade deals to other nations. Well, duh, they're not doing trade war with us. Of course, you push us to negotiate with other countries. We're going to give them good deals. I think what is more important at this point, this is just back and forth with the White House, and Trump is feeling pressure from all sides. I mean, he needs some wins because he got his election in November, yeah? So he needs some wins here on the economic front. He's losing everything in Hormuz. It keeps being a mess. So he's trying to double down on bombing. Trump is running out of options because of the clock. He's got only 3 months left. That's the main thing for him. The other point I would notice more is Canadian energy. I wanted to speak about this today. I think it will happen that we will export to market to Asia through British Columbia from Alberta. But I think British Columbia wants to take a, kind of a Hormuz tax, the British Columbia tax to Alberta, saying, okay, your oil and gas goes through our province. We want a little bit a share of the profit. Once they figure that out, then they should be able to send it, and Canada should be able to diversify itself. Back to you, David.
I, I
Excellent.
actually I actually don't think we've tariffed Canada enough. As somebody that lives in Pittsburgh and I just had to deal with all that smoke for the last week, I think we need to tariff you guys a little bit more and then ultimately take over your country to get it better ran because this is ridiculous.
All right, folks. On that note, we're going to leave it for today. Thank you for an awesome show today, everybody, all the speakers that joined us, new and old, and definitely audience members. Please follow all of our speakers. Thank you for joining every morning. We'll catch you here tomorrow morning. It's a big day tomorrow. We have Google, we have Tesla, we have Intel. And we are building up to next week Fed meeting. So please join us. We'll catch you here at 8 a.m. Take care and have a great day.